been a pretty volatile last couple of months. Starting in the fall of last year when the market sold off from September-October timeframe to December 24th low by about 20%, and then quickly bounced back pretty much for similar amount. Volatility has been caused by a number of factors, and the Fed sort of communication was one of them. And there was expectation that rates are going to continue to go up. While inflation was relatively benign, the Fed was on a path to continue to raise rates. And the market was thinking that that could cause meaningful slowdown and eventual recession, and the Fed will basically choke the markets. What happened earlier this year in January at the FOMC meeting in January, the Fed basically changed its tune, and it said that it's taken a path of patience, and that's all the market needed. So the risk assets got a bid, and market went up quite substantially. The cyclical sectors such as energy and industrials have gotten clobbered, and those sectors have bounced back pretty meaningfully. But the bounce or recovery in the first quarter has been pretty broad-based. Every sector was up. Some sectors have done better than others. For us specifically, some of the media stocks, so Comcast has done well. Charter Communication, after they came out with fourth quarter guidance, and provided 2019 outlook. Stock was up over 20%. And Dish, which has been clobbered last year, also bounced back strongly. So those are the, within communication space. Consumer staples, which are the couple of names that we own, such as ABI InBev and Philip Morris International, also a similar sort of recovery story. Last year was not a good year for those companies. This year, they both came out with good numbers in the fourth quarter and provided decent guidance. So those stocks have done well. The sectors that has been somewhat challenging for us so far this quarter are within healthcare, and specifically healthcare services. It doesn't seem to matter what's going to happen 3 to 5 years from now. What matters is regulators or politicians are going to try to change sort of the structure. And those are valid questions. We'll see what happens, but those are the reasons why healthcare has been under pressure for us. We're not making macro prediction of what's going to happen 6 or 12 months from now. We know that regardless of what the trade situation is with China, as long as people need to buy ag products, Deere is going to sell its green equipment with its dominant share in the U.S. and Latin America, and continue to generate a lot of free cash flow. Same thing with Comcast, same thing with other names. A new portfolio holding for us is Charles Schwab. Yes, if the yield curve inverts, it's not good for them, but Charles Schwab has been gathering asset at 5% a year, and we hope and certainly expect it to continue to do that. So short-term volatility notwithstanding, we remain optimistic about high quality, reasonably valued franchises that we own in the portfolio.